Well, hello there, Dana here with a potential trade for next week. I'm specifically looking at Allstate Corporation, ticker symbol ALL. Allstate falls within financials or XLF sector. On your screen, you see Allstate on the week aggregation, meaning each candlestick represents 1 week of price data. If you see my cursor here, I'm specifically looking to trade the width between the support to the resistance or the floor to the ceiling. If you haven't watched my video on support and resistance using engulfing candles, I'd recommend that you do so. It would make this video make a lot more sense. So first, I am looking for a reversal signal. And based upon my strategy, I see three candles that combine to create a hammer candle. And I see that that hammer candle is coming off of a support level. The support level you see, again, was based on an engulfing candle that I found on the quarter aggregation. So step one for my strategy is the signal. Step two, I will need confirmation. What is confirmation or the trigger price? That would be when price breaks above the high of my 3 week candle here, which would be above 162.21. And then I need my first target, which will tell me when to exit my contracts. And my first target will be the high of this candle, 168.05. Dana, why is that your first target? I look 3 candles to the left because my signal is 3 candles. 3 candles to the left, that's 168.05. That's based upon the probability that price tends to retest recent highs. So the other thing I notice here is I have a ceiling or a resistance level right up ahead, which gives me an additional target at 170.90. And that's the trade opportunity. That's my strategy in a nutshell. I trade the distance between a support or a floor and a ceiling or resistance. This is the area, if you see my cursor, that I will look to trade. And this is over $5 of opportunity, which will be a good trade. The next analysis for me will be the contract. I will probably look at a 165 strike because the 165 is in between my confirmation and my target. Why does that matter? To increase the probability that my contract is in the money or at least 100% at target. Having a strike price that is in between the two increases those probabilities. Of course, you have to find your own strategy. This strategy may work for you, but I certainly encourage you to find your strategy, back test it, write it down, and follow it. Again, you need a strategy to find your reversal. That's the reversal that I just walked through with you here, signal, confirmation, target. All of this is based upon candlesticks or technical analysis. I talked about my contract selection strategy. My strike price will be in between confirmation and target. And the last piece will be risk management. Risk management for me will be a stop loss of 50% of this candle. I will plan to hold this contract at least 2 weeks to let it play out, and then I will exit at my target. So I hope this information is helpful for you. The biggest takeaway I want you to have is just to do your research on the weekend, find your place, write out your plan, write out your strategy. So no matter what happens in the market next week, if your rules are satisfied, you can execute flawlessly and mechanically with no emotion. So, questions, let me know. Otherwise, I'll see you next Sunday for Q&A. Have a great evening. Goodbye.